Now let's take a look at the bigger picture. Matthew Johnson's with us, president owner of Johnson Wealth and Income Management. Matthew, thank you for being with us. So we have this record inflationary picture. You have a Fed that is rushing to move now with monetary policy, fiscal policy that I'm not sure what the policy is at this point, because we had a whole conversation about the spending and tariffs and how things maybe could change and at least help a little more. But what do you make of the sell-off? Because it really is, at this point, as we are speaking, this is the 6th week in a row for the S&P and NASDAQ to drop. And as we are speaking, we are at session lows for the Dow and the S&P as well.
It's absolutely amazing, isn't it? And thank you for having me on again. It's kind of like swimming with piranhas at this point. It's just absolutely amazing. And I've seen this before. It tends to pick up in momentum. It seems like the sell-off just exacerbates. It picks up more notoriety. More people are wanting to, make certain that their money is safe. And so they begin to sell because their neighbors are selling, their friends are selling, and it just gets worse and worse. And then we all know how the story ends. We know that eventually there's going to come this time where all of a sudden we take a bit of a breather and we realize, why did we even do that? That just doesn't seem to make a lot of sense. But we've got to be prepared for more volatility. We've got to be prepared that this is going to likely continue onward down. And we've got to be asking ourselves, what are we doing? How are we investing our money? This is where people are looking for safety. And if you're a growth investor in today's market, well, if you've already been fully allocated in this market, you're taking quite the beating. And so this is where I really empathize with investors, clients who their financial advisor has suggested that they be all in, and they have no cash sitting on the sidelines to be able to pick up some good quality discards. If you're sitting in portfolios that aren't producing income, it's really hard to come up with more money to take advantage of this sell-off. And in reality, we've got to be prepared for times like this, because we know that the market is a very emotional place. It's not a logical place, let's face it.
Yeah, without a doubt. And so sometimes you see a lot of selling. I just saw a headline in this moment that just passed and said that Block Square is down because of it's so highly correlated to Bitcoin, but it doesn't necessarily, it is not Bitcoin, but people are selling it off. So that doesn't necessarily always make sense, right? And that goes to your point. In the meantime, you're looking for investments or buying opportunities that have really low PEs, names that are quality over time, right? I mean, what are you advising to investors?
Absolutely. We want to look for companies that are going to be free cash flowing. We're looking for companies that have low PEs. We're looking for companies that pay good dividends with a history of paying dividends without cutting them. There's no such thing as a recession-proof investment. It doesn't exist. But if we can look for things that are more recession resistant, in other words, companies that have continued to pay their dividends even during periods of recession, that brings a bit of stability to our portfolio. The other thing that we can't ignore here is fixed income. Fixed income is contractual. And so when you think about how a bond functions, it starts its life at $1,000, it matures at $1,000. And if you're picking up these bonds, not only are you getting a higher yield, but you're also getting a capital gain when they mature. You buy them at 800, they mature in 4 or 5 years at 1,000, you just made yourself a 25% capital gain. And so we cannot ignore the math of fixed income and the place that it represents, or that it should represent, in our portfolios. Income is something that if you have enough of it, you won't have to be selling shares to get the income that you need. And if you have income and you don't need it, well, guess what? That's a perfect opportunity to reinvest those interest and dividend dollars back into things like this, times that are giving you a perfect buyer's market. So is it going to get worse before it gets better? I most definitely believe it will. I don't know. Maybe the market's going to make me into a liar, and we are going to see, the 10-year Treasury at 3.25. I'm not really sure. But this is when we get back to the fundamentals, and we're looking for good quality companies that pay good dividends. We're paying attention to the foundation of our portfolio, making certain we've got plenty of fixed income that's good quality stuff, not junk, but good quality stuff. And we're exploring these areas of opportunity so that we can buy into things like this.
So the bottoming out process, what do you think that's going to entail? How will we know, or sort of know, that we've bottomed?
You know, that is a very difficult question. I think the more important question is, you know, when is the pain enough for you, the investor, right? Because everyone has a different risk tolerance. And we see this even scientifically. There's the hindsight bias, right? Where individuals, the market is going down, 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 and they continue to hold on until all of a sudden they reach this threshold where the pain is too much, and then they sell, right? And then the market may continue to drop just a little bit, but then all of a sudden the market starts going back up. And they're very careful. It's kind of that once bitten, twice shy. And all of a sudden they see the market continues to climb, it continues to climb, and then they say, fine, I'll get back in. They get back in just in time to hit another peak, and it starts to go back down. So it's not about when are we done globally or when are we done in this particular market. It's for you, the individual investor. What is your tolerance? When are you going to say that enough pain is enough pain? You know, do we have another 3 months of this? Do we have another 6 months of this? Do we have another 9 months of this? I think we have so much uncertainty right now, Nicole, with things between Russia and Ukraine and the other countries. It's extremely difficult to know when that low has actually been hit. I think things will begin to taper down just a little bit as people start to wake up and realize that they overreacted. This is a very knee-jerk reaction. But you know what? We're very close right now to what we saw in 2018. 2018, I think the market was down, roughly 19%. We're there. So we need to hopefully bring this to an end if rationale will start to come back into the market.
Right. And I know we talked about low PEs in these quality companies, but you also like services more than goods for an investor, and also corporate bonds and preferred stocks. Matthew Johnson, nice to see you, President, Owner, Johnson Wealth and Income Management. Thank you.
Thank you.